Alright, hello, welcome to Camel Finance. I'm your boy Camel, and I want to start by playing you a clip.
Ross, what do you think of bitcoins? What do you think of bitcoins? Blockchain, Bitcoin, cryptocurrency.
I don't know about that one.
No way!
Oh no, wait a minute.
The digital
Blockchain.
Yeah,
Yes,
digital
yes.
currency,
No, no, no.
bitcoins.
Very interesting development.
Yeah, okay, moving on. Did you know that you just can't ban Bitcoin, and even if you try to, people are going to find ways to mine it? And this guy, I was pretty astounded by this. This guy has been using cooking oil and filtering it through what looks to be an oil filter from an engine, and then putting in a generator, using it to generate electricity, and then using that electricity to mine Bitcoin. So look at this, filter the used cooking oil, stick it in a generator, hook it up to an ASIC, and start hashing. So yeah, good luck ever banning that. Over 500 million new investors are projected to buy crypto by 2030, a HSBC report reveals. So we are continuing to see adoption, and I love to see it personally. At the same time, Bitcoin is ready for a massive bull run. According to a MACD indicator, this is the moving average convergence divergence. If you didn't know, now you know. Here it is, putting in a bottom signal in 2015 and again in 2019, and now we are just about to tick bullish once more. So are we about to start a massive bull run? Quite possibly. The current price is flirting with the idea of hitting 22,000 US dollars. It actually hit that at about 2 in the morning UK time this morning. The question for me is a Bart Simpson pattern on the cards? This is where we get this big pump, a sort of sideways consolidation. I guess this level would be 22k today, and then a pullback down. So is that what's coming? I think it all depends on the CPI data. You can see here, if I scroll down to, so this is tomorrow, September 13th, and then scroll down a bit more, you'll see that around 1:30 UK time, we've got all the US CPI data coming out. So that will be very interesting. We've also got a couple of European Central Bank speakers. There's one there and one before. So this is massive for the dollar. If you don't know why, it's because the ECB can do something to cause a flight to the euro or a euro rally. That will put pressure on the dollar, and we should see the dollar continue to pull back. So there's a lot going on tomorrow. I think most of the weight is carried in the US CPI data. A low CPI print will send us into a massive risk on rally, in my opinion, and a very high CPI number is likely going to send us to test the lows, and if not, take them out. So making sure we pay a lot of attention to that. I've been saying this for a while. Let's keep going. Bitcoin is repeating its past two bear market structures. As you can see, we had a big wide double bottom the first time, a much smaller double bottom, and this one looks strikingly similar to this one, in my opinion. So is that what's coming, or do we have to make a slightly larger base before we can go? That remains to be seen. But for now, this is all looking like we are much closer to the bottom than we are to the top. For all of you Ethereans out there, here is a real-time merge tracker. You can see that we are predicted to be completing this merge after only 17,000 more blocks. Currently predicted to take 2 days and 20 hours, 35 minutes. So the merge is going to happen. Is this going to be a catalyst for a huge bull market, or is this going to turn out to be more of a buy the rumor, sell the news type event? If I had to guess, and it would simply be a guess, I would say it would be the latter. Got 4 tabs on reset for you. The global real disposable income is crashing worldwide. So we can see that people are getting poorer and poorer, and their disposable income is falling and falling and falling. At the same time, even the US Army is recommending food stamps for its soldiers, and its soldiers are struggling with inflation. But I guess that shows you just how severe the inflation is and the cost of living crisis is. France is sending power alerts to the UK and to Spain after a trading error, asking them to be ready to send as much electricity as possible. It's weird that this is the sort of thing we're getting accustomed to seeing now. It's just energy crisis after energy crisis all over the place. Meanwhile, this guy is commenting on the loss of trust in the dollars and the euro and the de-dollarization of global trade. So I've got a 40-second clip to play you.
We have seen the loss of trust in the dollar and the euro and the pound as the currencies in which you can carry out transactions, hold deposits or assets. And that is why step by step we are moving away from the use of these unreliable, compromised currencies. And incidentally, even the US's allies are decreasing the assets denominated in dollars steadily. That is what the statistics tells us. The volume of transactions in dollars and the assets, everything is being decreased.
So amongst all the doom and gloom, it does feel like a recession is the only possible outcome. It does feel like there's no way those lows are going to hold, and there's certainly no way we're going to be making new highs anytime soon. But remember, this is likely not the first time that the herd is wrong. The consensus is that we have to go down significantly, that we're in a bear market. And although this is an unpopular opinion, Raoul Paul certainly agrees. And the opinion is, what if we told you the S&P 500 will reach new record highs in 6 months and continue rising for a few more years? Most of the market would be laughing at this. Now, this is quite a lengthy thread. I'm not going to go through all of it. I'm just going to point out that there's always a reason to be bearish, whether it is the Second World War, whether it's the Korean War, the Cuban Missile Crisis, the assassination of President Kennedy, race riots. It doesn't matter what it is. There's always something to be concerned about. There's always something to point at and say, well, this is going to have to cause the end of the world. But of course, it often isn't the end of the world. And according to all of this and the data, what you can see is the bull market, we are still in a secular bull market, and it usually holds up pretty well through all of these sorts of times. So you can go and read this in your own time, go and, dive right into this. However, I'm just going to draw your attention to this for the sake of keeping this relatively short. During a secular bull period, which is where we are now, you get an average drawdown of 27%, and it lasts 9 months before we get a recovery. This is the average, as you can see here from all of these times. In a secular bear period, then you get an average pullback 43%, and the recovery takes 48 months. We are currently not here. Now, that doesn't mean we couldn't produce a situation like this. It doesn't mean that if we get a hot CPI print tomorrow, that we couldn't take out the lows and then start to make a much stronger case for a secular bear trend, for a secular bear market. But where we are right now is in a secular bull period. So it's much more likely that we're going to behave like we have historically. Perhaps the path of most pain here is higher, and perhaps the big trick that's being played on everyone is convincing them that we are in a bear market, when in fact this is a pullback within a secular bull trend. I have personally made several videos where I make the case that the lows are in. You can see this one was from 3 weeks ago, and I've made several that sort of back this point up. I've not been dogmatic in my approach. If you haven't seen this, this shows the bear scenario that I think the market is putting most of its weight on. I think this is what most people expect to play out, but I think because of this, it's much more likely that the lows are in. So if you haven't seen any of those, go back and watch those. We're going to find out tomorrow. But I want to point out that every time the inflation tops, the stock market rallies. Every single time. So you can see here in blue, we've got the inflation rate. Every time you get a peak, it coincides with a rally in the stock market. Now, this is the RSI applied to the inflation rate, and you can see that in each case where we get a top in inflation, it's also marked by a top and a rollover in the relative strength index. And if we fast forward to today, we have that rollover, we have the CPI apparently coming off for the last 2 prints. One more print lower tomorrow will, in my opinion, catalyze this rally to new highs, and I don't think many people will be expecting it. I think a lot of people will be caught offside and then later forced to chase this rally higher. I'm looking forward to seeing what happens tomorrow, and if you want to see how I'm going to be trading out of this in real time, regardless of the CPI result, make sure you hit that subscribe button and turn the notifications on. Signals don't get better than this. The net percentage of consumers expecting stocks to rally versus to fall has rebounded from the worst levels in a decade. A move below and back above the negative 13.3% has had a perfect positive record since the 1990s. So each time we breach this level and recover it, you can see that that coincides with major upside for the stock market. So with all that said, let's look at some charts. The dollar appears to be coming off. This is benefiting Bitcoin, as you can see. So this looks like we have an early cycle low in place. Do I expect some volatility this week? Yes. Ethereum looks to be performing a breakout retest and then a resumption off We'll see how this goes. This could potentially be a long in the coming days, but I do want to see that CPI print first. And the same is true of Bitcoin. If this is going to start an enormous risk-on rally, then there'll be plenty of time to get in here. So I'm not too worried about that. US equities, we're right into resistance here. The futures were flat this morning when I checked. So again, maybe we get a breakout, retest and resumption, and that can become our long. Or perhaps we're going to drop back into this area by Tuesday, and then we can look to take a breakout of this. So those are the two options for the S&P, and the same is true of the NASDAQ. We are looking for a retest of this line, and then we can enter on that retest. Took a long Friday, real called well ahead of time and notified live on the channel. So looking to push this to at least the top of the range, and then hopefully we can get a breakout if we can get some follow through in the equities. Oil is back above this line. Obviously, if we get a cold CPI print, if we get a low CPI print, then this will roll over. Gold starting to look like it's got a bit more strength, a bit more momentum in it, so that's good. Waiting to see the CPI print, I think, is the theme for this. Silver recovered its big trend line from all the way back here, so this is a positive development. A little bit more patience will go a long way here. I'm likely going to add another silver contract today if we can get a breakout, or preferably a breakout retest resumption from here, so I will notify that as and when I do something to it. So overall, not much to say. We've been playing incredibly patient and it has benefited us a lot. I think we just have to wait until tomorrow lunchtime in the UK, tomorrow morning for the people of America, and then we will know if we are going to be heavily short this market or risk on targeting new highs. Of course, my expectation is to the latter, but that remains to be seen. If you found value here today, I'd appreciate it if you could drop a like on the channel. Hit that subscribe button if you've not already. Hello to all the new subscribers. Appreciate every single one of you. Thank you for all the support the channel gets. It really means the world to me. If you've got anything you want me to cover or dive into, then throw it down in the comments. And if not, I wish you all the best for the week. Take care from me. All the best. Cheers. Bye.